Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin crashed to $81,000 on Friday morning, marking an 8-month low and triggering over $2 billion in liquidations across the crypto market. Ethereum fell below $2,700, while major altcoins suffered even steeper losses. Strong US jobs data reduced expectations for a December Federal Reserve rate cut, creating a liquidity crunch that sent shockwaves through digital asset markets. Nearly 400,000 trading accounts were liquidated, with Bitcoin positions alone accounting for $962 million in losses. Long positions bore the brunt of the damage, totaling $1.78 billion in losses. Bitcoin briefly dropped below $81,000 before recovering to around $84,141, where it trades currently. Research from crypto analysts reveals that US-based investors and institutions are driving the downturn. During American trading sessions, Bitcoin has lost roughly 12% since November 1st, while Asian sessions remain relatively stable with only 2% declines. The Coinbase Bitcoin Premium Index has turned negative, indicating US demand is significantly weaker than global markets. Institutional outflows paint an equally grim picture. Spot Bitcoin ETFs recorded $903 million in outflows on November 20th alone, pushing total November redemptions to $3.79 billion. This marks the worst month on record for ETF flows. Ethereum ETFs shed $261 million in a single day. Corporate treasury firms are feeling intense pressure. BitMine Immersion Technologies, the largest corporate Ethereum holder, is sitting on $4 billion in unrealized losses after Ethereum prices fell 45% since August. The company owns $9.6 billion in Ethereum purchased at an average cost of $3,120, but ETH now trades around $2,700. BitMine shares have plunged 52% over the past month. MicroStrategy faces its own reckoning. Executive Chairman Michael Saylor issued his second public statement defending the company against concerns about potential MSCI index exclusion. The company faces potential removal from major equity indices in February if MSCI rules that digital assets represent 50% or more of total assets. Strategy shares have declined 43% over the past month. Technical indicators confirm bearish momentum. Bitcoin has confirmed a death cross, where the 50-day moving average falls below the 200-day moving average. The Fear and Greed Index has dropped to 14, indicating extreme fear. However, Bitcoin's RSI sits at 23.18, deeply oversold territory that historically precedes relief bounces. On-chain data reveals short-term holders are capitulating at scale. Wallets that purchased within the past 90 days are realizing losses of $600 million to $1 billion daily, matching stress levels from the November 2022 FTX collapse. Meanwhile, whales accumulated $65 million in spot BTC near the $85,000 level. Federal Reserve official John Williams sparked brief hope on Friday when he indicated room for additional rate cuts, sending Bitcoin from $81,000 above $84,000. However, December rate cut odds remain volatile. With sentiment at multi-year lows and oversold conditions deepening, traders face a critical question. Is this capitulation or just the beginning? That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.